So let's get right into this breakdown. As you can see, obviously, and of course by the title, the lesson today is going to be understanding the higher time frame levels. What do I mean by that? Basically, as it shows in the title, going onto the higher time frame, seeing where markets reject quite aggressively, and then that is your higher time frame level. So you may notice where sometimes you might see like the big guys, like the banks or the funds, suggesting like, oh, euro dollar could bounce around 115, or it could bounce around 110, or GU could reject from like, let's say 130 on GU. These are big higher time frame levels, and pretty much everybody, including yourselves actually, should have pretty much the same higher time frame level. So let me just quickly delete all of these because, well, this is I don't want to delete the vertical lines. I do have the vertical lines on for a reason. And for those who are in the mentorship, you know that these are literally most of the Fed meetings. So what I like to do, and if I could just go back in history, you can see I've done it since 2023. I have slacked slightly, but since 2023, I have been doing these line charts because what it gives me a good guidance on, it could help you as well. It also does give me, it did help me at the start there, where I'd be like, okay, Fed meeting was here, price action done this. What was the reason why price action did this between this Fed meeting and this Fed meeting? What was the reason why it rallied? And this could be a bit of homework for you to do. It does help quite a lot, actually. And I would recommend you trying to do that. So I will have to add on some more line charts eventually, just going all the way towards the end of 2025. But essentially what you're going to be doing is going on the high time frame, thinking, where has markets rejected from? So we rejected aggressively from here. We rejected aggressively from around here. We rejected aggressively. Again, you can see how markets traded into this. As we came into that level, there has to be a reason for it to trade higher than that. And like I said, the reason that it trades higher is because of fundamentals. So if you know fundamentals at that point was really bullish on sort of the next 3 to 6 month horizon, then you would have expected DXY to trade up. So we can apply a similar framework here as well, which I'll just talk about in just a moment. But that's essentially all you're doing is marking out the higher time frame level. So if I just get up a horizontal line and just mark out simply, what I like to do is just mark out the highs and the lows. So we rejected from around here, around here, around here. We consolidated as well, struggled to trade below that. We did trade above that quite aggressively, but then rejected quite aggressively below it. Seems like it just came into these last lows here. What else could be a class as a high time frame? All these other little bits and bobs in between it are to some degree high time frame, but they are a bit more applicable on the lower time frame. Because what I'm thinking about here is the legs in the trades. So that's a leg, that's a leg. This is all lower time frame, 4-hour sort of trends, isn't it? This is a leg. That's a leg. That's a lower time frame pullback. That's a leg. That's a move. That's a move. That is also a move. So if we'll then go on to the line charts, whereabouts is it? Here we go. Line chart. And then if I just quickly delete this stuff when I drew on it. Bang, 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 bang. And lastly, bang. And you can see how markets on the DXY, anyway, this is applicable for everything, equities, bonds, you know, FX as well, of course. It's literally the same Bitcoin if you want to. It's applicable on everything. So what you're doing is going on the daily time frame. You could do it also on the weekly if you wish to do. I tend to do it on the daily because you can gauge what the weekly is doing by simply just looking at the daily. And then just marking out the high time frame level. So you can see how previously I marked out 95 because what I saw, big rejections. We struggled to come towards that level, struggled to come. Then we had a big reason to trade above it. We then reject back into that level, and then we traded all the way above it. Similarly here, we struggled. That was just COVID volatility. And then we had a big reason to trade above it. So if you know markets came below, as it comes towards this level, you're going to ask yourself simply this: is there a reason to go lower? That's all you're asking. And like I said, the reason could come is going to come from fundamentals. So you'll then be thinking, okay, what's the Fed doing? What is sentiment doing? etc. Everything that applies to the dollar, you'll be asking, does it still make sense for it to go lower? And possibly at this point, this is Fed hiking cycle. At that point, possibly it didn't make sense to go lower. I'd have to go back to all those breakdowns we did at BMO all the way back then. But I'm sure we looked at it and thought maybe it doesn't need to go lower. And similarly up here, as the XY comes higher, where is it going to come to? Well, remember, like I said at the start, if I can find the text, here we go. Markets trade around whole numbers, and for the big guys, it's easier to predict. And I don't think I added it on there. It's a magnet, or I did speak about it, but I didn't add it on the text. It's a magnet. So where's the magnet going to be then for the DXY on the upside? Well, obviously I am recording this on Thursday, the 31st of July, 2025. So we just had the Fed meeting yesterday. Well, the Fed was a bit more on the hawkish side. Europe is starting to see struggle. So the magnet for the DXY is going to be around 100.8. Well, like I said, round it to the nearest whole number. So the nearest whole number between that is 101. And you can see 101. You don't have to make it perfect. Have a rough gauge. And then the question you're always asking is, as it gets towards that level, does it still make sense for more upside? If it doesn't, so essentially all you're doing is, if the reason why it is going to go high is because the Fed is hawkish, Europe's starting to see a bit of struggle, and possibly this week, obviously tomorrow's NFP. If NFP is really strong, we could possibly trade above that level. But let's see. It depends on how strong it is and what the components in that is. And that's why it takes a little bit of work. But as you know, trading, nobody said trading is easy. So that's a magnet. So if you were buying here, you would be targeting 101. If we trade above this level, and there's a reason, well, where's the next magnet? I wouldn't say 106. That's quite an aggressive move to the upside. So in that scenario, what I would do is stuff like this. So let me just go back to the candles. I would just simply look for where the next nearest area of rejection was. So this would be a near-term target of around 103 if we just round it to the nearest sort of numbers. You can do 103.50 as well. 103.50 is just here. I don't think you can see the line chart. Let me see if I can drag this over. There we go. Hopefully that's a bit better for you. 103.50 on the right here, or 103. Either one is correct, but what you're asking yourself as it comes towards that level is, does it make sense for it to go higher than this level between that band and 103.50? If it does, then you're looking for more upside, and then top side would then be towards 104.500 to 106 at that point, because it's a bit difficult to predict on the dollar to rally. Let's say it's at 100 and DXY at the moment, to go from 100 to 106.50. That is quite an aggressive move. This is on the daily time frame as well, don't forget. So all you're doing as a trader is just working between bands to bands to bands. So 101 is the first target. If we trade above that, then 103. We trade above that, then 104.500 towards this high on the left here. And then if we trade higher than that, then it will be 106.500, basically towards these lows and also towards these big high time frame highs. And that is all you're doing. And then with technicals, you're just working within that. So you'll be like, okay, cool. I know I want to be buying towards 101 because of X, Y, and Z. Now let me go on the lower time frame and try and find that entry. And then you can do whatever technicals you want to be doing. Oh, there's a demand zone. Oh, there's whatever sort of reasoning that you like to do. And remember, every technicals work. It's about how you apply it. It's intuition at this point. Then you can be like, okay, I don't know, we pull back into this area of sort of region here, and then we buy towards 101. That could be like a level for you to consider. Hopefully that's making sense. Like, the high time frame really dominates everything. And if you can work with the lower time frame using the high time frame, you'll be very, very good. So let me just delete all this now. So that's the DXY, and we can apply the same framework to other technicals. We could look at euro dollar, but essentially euro dollar is, if I remember how to do this, shift I, nope, not that one, command, oh yeah, so for me it's alt and I, on Windows, or on Mac it might be Alt-I, Command-I, sorry. And this is basically euro-dollar inverted. And largely, as you may know, the reason DXY is literally euro-dollar but inverted is because euro has more weighting in the DXY. I think it's like 56% or something. So that's why it's literally inverted of euro-dollar. So if we just simply look at GBPUSD, so we were looking at this, but I spoke about in the Discord that we could come lower because of the Fed, and it looks like that's happened. So we didn't enter it anyway because it didn't really make sense. Technicals either wasn't showing any rejections at that zone, so we left it alone. That's fine. So now what we're thinking is why on the Discord was I thinking around 131 ish to 131,500 because it's all around these lows. Well, simply that's the next low on this graph. So if I just delete this and I delete all these other lines here because they're just high time frame levels. High time frame level, we'll delete that as well. We'll delete that as well, that as well, and that as well. So simply here as well, kind of as you can see, around 134, if I just delete this one, 134, big rejection point there. If we look to our left, big rejection point, big rejection point, big rejection point. We did come slightly low on this leg. We did go a bit higher, and then we had big trades below 134. So I could probably suggest 134 is a big level. It's also a nice big whole number. So if markets really wanted to buy at 134, they would have bought at 134. At this point, we saw a lot of markets going strong the dollar. We saw a lot of bigger trade deals. So at that point, you'd think, okay, 134. We did speak about it in the breakdowns, by the way, but 134 would likely get breached. So then at that point, we're thinking now, so if 134 is going to get breached, where is the next level for us to monitor? Well, in the near term, if we just go on the line chart, the near term is going to be these lows here. So if we just go right to the peak of the low there, where does that line up? And you can see 131.9. So if we just round it to 134, 132, sorry, 132. And that will be your next target. If we trade below 132, which does kind of seem plausible at the moment, but I will speak about it in tomorrow's breakdown for the members, of course, where is the next level it's going to come to? Well, obviously, if you're selling, you're aiming for lows, ideally. But the issue for us, and the reason why we could also consider highs, is because the dollar should start to weaken towards the end of the year. So we're also looking at reasons to buy the dollar. Sell the dollar, i.e. buy GU. So what I'm thinking now is, okay, obviously we can mark out the low. So we mark the low there. Also rejection points, big rejection point there, big rejection point there. And if we just look at where that rejected from, the nearest whole number was around 128. You could also do 128,750 as well. It's also fairly valid. Below 127, 500 to 128 whole. So that would be a target on the downside. Well, where would a reason that we could come to on a potential buy opportunity? Because remember, like we're saying, the fundamentals do still point to being bearish the dollar towards the end of the year. So we're also looking for reasons to buy it. Well, if we just go back onto candles, and then we think, okay, look to our left on the daily time frame. Where has, in the nearest technicals, markets rejected from? Well, you can kind of see that we saw a rejection point here. We saw some consolidation, some rejection points there, rejection points here. So then if we just get the average of that as a whole number, 130. So 130 would be the opportunity to buy it. As you may know from technical videos, I am a supply and demand trader. So is there any demand zones there for me to buy from? It doesn't seem like there is. So what I could be doing at that point, or what I will be doing actually, is as it gets towards 130, because we may break below 132 based on what we know. So 130 would be the next level, is as we trade below 130, do we start to see breaker structures? Like that video I spoke about in episode 1, do I see a breaker structure out of that level? Then I'll look for a demand zone, and then I will be targeting the next higher in this trend because I'm buying. So Number one, we could aim for 134, and then it will be 136 because that's the high there. Because we could just pull back like this and then trade lower. So that could be creating the high. So it could be about 134-ish, give or take. And then 136, and then 137 to 138 would be the next highs here. Here. And then if we do pull back slightly from 132, because it's a big level, remember, then that will be the target for us on the upside. Does that make sense? So right now, 130 does kind of seem logical for the downside target for GU for a buy. And then obviously, as like I said, all you're doing is you're just monitoring fundamentals as we get towards that level. So monitor fundamentals as we get toward 130 on GU. Basically, what you're thinking about, you're not thinking about anything new here. What you're simply thinking about is, why is the dollar so strong here? And does it still make sense for that strength to continue? If it doesn't, then 130 will be that target where markets will reject from. If we get towards 130, sorry, and it still makes sense for downside, then where is it going to target? 128. That will then be your next rejection point for a buy. Does that make sense? So this is applicable on every single time frame. Lower time frame, higher time frame, 1 minute, 5 minute. I obviously don't trade that. I know people like to do that. That's fine. I'll let them be them. But it's applicable on all time frames. Applicable on S&P, other equities as well, Bitcoin, bonds, etc. But what you are mostly important about is number two. There's well, not number two, but there's two rules, shall we say. Number one, is it rejecting on the higher time frame? HT or HF, you might see it be called both. If yes, then that's a valid level. Then number two, what you're thinking about is, what is the nearest whole number? I could make a video on this actually. It's possible if people let me know what they think, but what is the nearest whole number at this high time frame level? So like here, for example, let me just okay it. If you marked at this low, you can see it's kind of like very, like the numbers are very jittery towards the right. Here it says 127.45. So that's why I just round it to the next whole number. Because number one, we know the big guys like to trade at whole numbers because for P&L purposes. And it's just better books as well. So when it comes towards the end of the month or the quarter, it's just much easier to what's the word I'm looking for? To analyze it and know like what you're making and what you're losing, etc. Obviously, it will tell them on the dashboard, but when you're speaking to clients or when you're speaking to other brokers or traders at other banks, it's just much easier to do, I bought from 138 towards 140. This is how much I've won. This is how much I've lost. Like the trader will know roughly a rough gauge of how much you have earned or lost. So number one, is it rejecting on the higher time frame? If it's yes, what is the nearest whole number? That's literally higher time frame levels. Like it's not difficult, is it? Like it's very simple. Like I'm sure you've probably thought about this as well, but it's very applicable. Big whole numbers, big rejection points on higher time frame levels. And then if we trade below this sort of 128 handle, well, where would be the next region? So let's just go back on the daily time frame. We could also put it to a line chart just to make life a bit easier. I like life easy. Number one, big rejection points at 124. Well, obviously that's a 400 pip move around from 128 to 124. So what we could think about is the interim between that. Well, we can see roughly around 126 we've rejected from here, here, and here. So that could be an interim level of 126. You could use that as targets. You could use that as take profit zones, entering zones. All are pretty valid. Obviously, it depends on your personal strategy, of course. And if we trade below 124, well, the next lows are at 122. Well, I guess in this instance, it's 200 pips moves here, but it's valid, right? As markets get towards a level, it will reject from it. As it gets towards this sort of 126 handle on the hit, we're rejected from it. So all the big guys will just be doing is going on the higher time frame, looking to the right and thinking, okay, 122 here, 1.22, 1.24, 1.26, 1.28, 1.30, 132, 134. Obviously for GU, like I said, it's kind of, what's the word? It kind of is not 200 pip increments. Obviously, it's not going to be like that for every chart. But for GU, it seems like that seems to be the case. And then that's all you're doing is just monitoring all of that as you go through your markups. So to conclude, understand high time frame levels. Essentially, all you're thinking about is where is markets rejected from aggressively. You know that markets like to trade around the whole numbers. You can see that on the charts. Obviously, the reason for that is it's just easier for P&L. It's even easier for the books towards the end of the month as well. And markets will use that as a magnet. You can use that also as take profit zones as well. So that has been your episode 2 of understanding higher time frame levels. If you have any more videos you'd like me to do, please let me know. But apart from that, please subscribe, please like, and please drop a comment if you enjoyed this video. Apart from that, everybody, have a good rest of the week, and I'll see you in the next Technical Thursday video. Take care, everybody.